Welcome back to the one-day seminar on audit under income tax. I request CA Pramod Aregde, our Vice Chairman, to escort the speaker onto the dais and welcome him with a floral bouquet. Let me introduce the speaker. CA Shivshankar TR is a commerce graduate from Bangalore University and has completed his BBM in PES College of Business Management. He has completed CA as well as CS in the year 2007 and is a diploma holder in IFRS by ACCA. He has secured All India 12th rank in CS Intermediate in 2005. He has represented the clients in various forums, including CIT Appeals, Income Tax Settlement Commission, and before RERA. He has presented various papers in ICA and other institutions on various topics related to income tax assessments, tax directed at source, taxation of charitable trusts, penalties. His main area of practice is corporate audit, direct taxation, and RERA litigation. Welcome you, sir. Sir, the session is yours now.
Good evening, everybody. Yeah. So today we are discussing about practical issues in tax audit under section 44AB. This tax audit is introduced in 1984. So now we are in 2023, almost 49 years. So recently ISRO has launched Chandrayaan 3 and today is L1 and India-Pakistan match. Still we are discussing on practical issues on tax audit even after 39 years. I think the headline has to be changed. So we need to say, instead of practical issues, practical solution on tax audits. So we should not be saying anymore after 39 years we have any issues in tax audit. Anyway, so apart from that, so as we know, so each day our finance ministers are making a lot of changes. So that poses once again challenges or opportunities. I don't see it's an opportunity because this kind of issue ke liye, so nobody will pay extra charges. So it is only a challenge for us, not an opportunity. However, let us see what best we can do our clients with while doing the tax audit. Applicability of tax audit. So it is very clear, less than 1 crore. If the turnover is less than 1 crore, not required to do the tax audit. If it is above 1 crore and between 10 crores, this is only with respect to business what we are talking about. If the cash receipts exceeds 5% of the total receipts or cash payments exceeds 5% of total payments, then we need to do the tax audit. Otherwise, we need not do the tax audit. Next, if it is more than 10 crore rupees, then we don't have a choice, we have to do the tax audit. Now, for the purpose of turnover, what are the things we need to take it, what are the things we have to exclude it, what are the things we need to include it. I will not talk about generic things. So there are some special cases are there, only I will talk about that. Speculative transactions, forward contracts. In the case of forward contracts, I will say forward contract means it is future contracts. So what is my turnover? The definition of turnover for the purpose of tax audit. Okay, what is my turnover? Is it the value of the contract or is it a profit or loss or net profit? What is the definition of turnover for the purpose of tax audit in the case of speculative transaction with respect to forward contracts? So as per the guidance note issued by Institute of Chartered Accountants of India, so what they say, In case of speculative transactions, you need to take all the profits you have made, you need to take all the losses you have made, you have to combine together losses plus profit combined together. If it is exceeds the limit of 1 crore or 10 crore rupees or more than 10 crore rupees, then it is applicable. If it is less than that, we need to ignore it for the purpose of tax audit. So this is applicable only for 44AB. It is not how you present, whether you have to, in the financial statement you would have shown a net figure, profit or loss net figure. For the purpose of applicability of tax audit, we need to see absolute terms, all the profits, all the losses, then you need to add, and then you ascertain if it is more than 10 crores or more than 1 crore rupees. Definitely it should be more than 10 crores only, because you can't do the trading in forward contracts in cash. Okay. So keeping that in mind, so we can say up to 10 crore rupees you need not do the tax audit unless you have some other business. Okay. So next, sale of fixed assets. I have a sale of fixed asset, which is a fixed asset is nothing but my business asset, which I sold it for 15 crore rupees. My profit, I will say 11 crore rupees is my profit. Whether tax audit is applicable. For the purpose of tax audit, the turnover excludes sale of fixed assets. Even if it is 100 crores, you should not be considered for the purpose of calculating limit of 10 crore rupees or 1 crore rupees for the applicability of tax audit. Any other queries on this? So any other application issues? Okay. Yes. Yes.
Normally 35% of the profits is taken as business profits,
Mm.
65% is taken as agricultural profits.
Yes.
In that case, how will the turnover be calculated?
According to me, only 35% has to be considered.
Of the sales turnover?
Yes.
Sales of turnover.
Yes, because that portion itself it is deemed to be profits and gains of business or profession, that will taxable between 28 to 44, section 28 to 44. See, assuming I have a rental income of 10 crore rupees, whether I should get the audit, books of accounts audit required to be done? If I have interest income of 15 crore rupees, not required to be done. So what I need to see, what is the income which is chargeable under income from business or profession, only that income alone I have to see for the purpose of applicability of 44AB. But having said this, if you see any clubs, their income is exempt from doctrine of mutuality. So that means income is not even entering into heads of income. Okay, it is not entering into any of heads of income. But Karnataka High Court held for them it is applicable. In Kormangla club case, tax audit is applicable for clubs. So we need to take a practical view. So whether it is worth taking that kind of chances. So if you think that it is better to do it, you can mention in the form 3CA or 3CB, you say that as per my opinion, it is not required to be, tax audit is not required. However, we are doing as a abundant caution. Number two, if I can give you one more example, a charitable trust selling the books in their education institution, or in education institution they are running the buses for students, they will collect some fees, or some in hospitals they will be having a one pharmacy. Okay, all this, their main objective is not to sell the books or sell the medicine. It is incidental to the main objective. So I am computing income under section 11 and 12, not under section 28 to 44. In that case, whether we have to do the tax audit or not, so we have taken a stand, better to do it as a matter of abundant caution. Even trusts also, now they are allowed to do the business up to 20% of total receipt. Okay, so keeping that in mind, so you might have to see practicality of the situation. Just because I am doing the tax audit, it does not mean that I am doing the business. But you have to mention that one caution note in 3CB or 3CA, it will be beneficial for us. Next, applicability of tax audit for professionals. If it is more than 50%, if you are declaring income under section 44 ADA, then you need not require to do the tax audit. In the first case, my gross receipt is 40 lakhs, my income is 25 lakhs, I need not require to do the tax audit. Second case, my 40 lakhs, my profit is 10 lakh rupees, it is less than 44 ADA profit, then I need to do the tax audit. See this third case, my gross receipt is 40 lakhs, my profit is 2 lakhs, but tax audit is not applicable. Why? If my actual profit is less than the 44 ADA and that amount is less than the amount which is maximum amount which is not chargeable to tax, then you need not required to do the tax audit. So in my case, my profit is only 2 lakh rupees, hence we need not do the tax audit. That's what the section says. Now, keeping this in mind, I have a business income of 2 lakh rupees. Income from other sources, interest of 5 lakh rupees. Total income for me is 7 lakh rupees. Whether I should do the tax audit or not required to do the tax audit? Because it says profits is less than this one, at the same time amount not exceeding maximum amount which is not chargeable to tax. Whether I should see only business income or total income to decide whether tax audit is applicable or not. Total income, if I have only interest income of 50 lakh rupees is required, tax audit. Just because I have 5 lakh rupees plus 2 lakh rupees, whether I required to do tax audit?
But the interest income that you're talking about, it could be your personal assets, which is not connected to the business at all.
No, assuming it is connected with the business for the purpose of argument sake. So this is an issue. So I would suggest, if that being the case, better to do the tax audit. So, but what it says, it talks about such income. Such income means in that income from business. Income from business less than the taxable limit, nobody will see. What we will see, amount not chargeable to tax means it is total income, not income from business alone. Keeping that in mind, so we have two views are possible. Let us take a conservative view. It is, in my opinion, it is better to do the tax audit if all income put together, if it is more than 2.5 lakh rupees.
So in that third this thing, 40 lakhs turnover and 2 lakhs profit.
Yes.
Tax audit is required, sir.
It is not required with only 2 lakh rupees. If assuming is total income is 2 lakh rupees, then it is not required.
Under 4480A, you should normally show 50% as profit, right?
Correct. See, there is a proviso section, what it says, yes, you have to show minimum 50%. Then if you are not showing less than, if you are showing less than 50%, you have to do the tax audit.
Yes.
There is one more condition, it says, if you are showing less than 50% and whatever the actual amount which is not more than the maximum amount which is not chargeable to tax, then it is not required to do the tax audit. Okay, that is the condition what it is there. So if you see in the second column, I am telling yes, it is required to be done. I am doing only 25%. Okay.
Actually, on the basis of turnover only, we are 50% calculating. See, in the case of 40 lakhs, you are 50% means 20 lakhs.
Correct. Correct.
Then how the 2 lakhs is not.
This is actual. See, I am maintaining the books of accounts where I have a books of accounts and I am showing all this. It is not 2 lakh rupees on presumptive basis. It is on actual profits. What we are telling is profit is actual profit. It is not a presumptive profit.
So even in the case of business also it's available. This one is very professional.
No, as far as business income is concerned, even if it is more than 44 AD is applicable up to 2 crore rupees for individuals now. Okay. There, assuming if you are showing less than that, you need not do the tax audit now. See, whatever the proviso it is there in 44 ADA, it's the same thing has been removed from the 44 AD. Okay. There I need to see only two conditions, less than 5% of my receipt or more than 5% of my receipt or expenses is incurred in cash or not. Okay, that is what we have to see. Next, relevant form to be filed. So as we know, where the assessee is required to get the books audited under any other acts, then I need to give 3CA plus 3CD. If I am not required to get the books audited under any other provisions, then I need to do 3CB and 3CD. Here there is no problem. My question is whether a 3CA or 3CD, whether we can file the rectified form 3CD. Is it possible to file form 3CA, 3CD rectified? First of all, is it allowed? website is taking, no problem, we can file it. Okay. In my opinion, at any point of time, we find that there is some mistake, we can always correct it as per us. If it is a mistake, if it is a error or omission is okay. If it is a commission, so that we have intended to do something and done something which should not be rectified. Here is the case where the financial statement will get restated in the case of amalgamations, merger, demergers. See, we will get the NCLT order as on today. The effective date is from 1st April 2021 or 22. Okay, in that case, what I should do? I need to give a effective demerger order as in 2021. So I need to restate my financial statement. So that financial statement is not audited under Companies Act or any other act. So in that case, we need to give Form 3CB. We have to file a Form 3CB, not 3CA, even for companies. If it is an amalgamation, merger, where you have done the restated financial statement and did tax audit under section 44 AD, then you have to give Form 3CB, not under 3CA. Next, class 4, where we have to say assessee is assessee is liable to pay indirect taxes like excise duty, service tax, sales tax, goods and service tax. Whether I need to say liable to pay, then you have to furnish the GST number. Okay, but we know that he is liable to pay, but you don't have a GST number. Okay, so we know that he is liable to pay. The moment you say yes, then we have to put the GST number. Okay, otherwise I should say no. How do we circumvent this problem with the tax audit utility? Okay, how you want to upload in the utility, you upload, but we would recommend you to prepare one manual signed copy of tax audit report that required to be uploaded along with the balance sheet and profit and loss account, and signed copy of the 3CD where you can give all these disclaimers. Though he is required to be taken the GST number, but he has not taken, there is no way I can update in the utility, hence I said no, or whatever you have mentioned in the tax audit, give the justification what you have done in the utility and better to upload it. Next, class 8A, Form 3CD. These are new things, 115 BA, BAA, BAB, BAC, BAD. See, this form required to be filed on or before filing the return of income once in a day. Yeah.
In case of labor-oriented, suppose cooperative society, they need some ESIC and all those registration, and that is not being taken. So, do you need
No, this is these say payment of indirect taxes. So labor charges is not an indirect taxes. No, so then we need not be given.
yeah, so EPF and all need not be reported here.
No, it is only indirect taxes. So not required to be given in PF and ESI, not required to be given here. Okay. So this is section 115 BAA, BAB, where you will get a concessional rate of tax, 115 BAA for 22%, 115 BAB for 15% if it is manufacturing entity which starts the manufacturing on or before 31st March 2024, and cooperative societies and other BAD. See here, in tax audit report it asks under class 8A whether he has opted for any of this section. Then I should say yes or no. But client wouldn't have filed the switchover form in the website. He has an option to file this form on or before filing the return of income. Now I said yes, they will switch over. But ultimately they decided that I am losing the MAT credit, why to lose the MAT credit, but I will not switch over, next year I will do this switch over. In this case what happens? As an auditor, what is my responsibility in reporting? How do we safeguard ourselves with this kind of reporting? Sometimes at least clients consciously take a decision not to file. Some clients they forget to file. Many clients we can see there is a condonation application, automatic condonation was given last year, but even this year also we are getting appeals where they opted for switch over, but they have forgot to file that form 10BD, na? 10I, okay, 10E, okay. So, as an auditor, what is my role in this case? My request is, insist for them to file the switchover form before you upload the tax audit. That is the best case. Number two, if it is not possible, if they want to discuss and they want to explore the options, then take one representation from the management saying that this is what the beneficial, this is what we see that, hence we are going to switch over. You kindly go and upload the tax audit report with this your comment. It is always better to take a representation. First case better thing is do the switchover before even uploading, so that client also very clear and we are also very clear. Second thing, take a representation letter.
So over there, what we will write, either yes or no, we have to choose.
We have to say yes or no, but ultimately translate after 1 month, it might be exactly different. See, but yes, we have to say yes or no.
So what we should write, I am just asking.
No, you say yes. Okay, if assessee wants to choose under yes, you say yes. The manual form what you will upload, assessee is yet to file this form. However, we got the representation from the client that it will be uploaded on or before the due date of filing the return of income. Hence, I have chosen this column as yes. Mention whatever it is there factually. Next, class 13, method of accounting employed in the previous year. Whether there has been any change in the method of accounting employed immediately preceding year. See, last year I was in normal GAAP. Now I have converted into Ind AS. Okay. So whether I need to report under column 13B. Last year I was in normal GAAP, and now I have switched over to Ind AS. Is it required to be reported under 13B? See, what they are telling about method of accounting here, cash basis or mercantile basis. So if you change, from Ind AS or ICDS or Indian GAAP, no problem. So that is not considered as change in method of accounting. Then disclosure as per ICDS. This is very important where, yes, madam, okay. Here they have, as on today, they have notified only 9 ICDS. There are some other adjustments like employee benefits. For that we don't have a ICDS. And for the contractor or a real estate company, as per the Companies Act or Ind AS, they have to compulsorily have to do completed contract method. But as far as income tax is concerned, they are telling it is a percentage of completion method. So first 3 years there will be no revenue in the books of accounts. There will be huge revenue, it will come out of percentage of completion method. Whether it is an ICDS adjustment in the first place. Whether it is an ICDS adjustment which I require to be disclosed in column number 13F. Because if you see ICDS for revenue recognition, they are not talking about percentage of completion. They are only talking about significant transfer of significant risk and rewards to the customer. As far as builder is concerned, he is not transferring the risk and rewards because all the ownership including title of the property is still with him. Only risk and rewards will be transferred only at the time of registration or handover. Until that it is there, but still I am recognizing the revenue. So if that being the case, whether it is an ICDS adjustment or not, in my opinion, this is ICDS adjustment, but you should not be disclosing under revenue recognition, but you have to go for significant accounting policies. ICDS 1, where there is a significant accounting policy difference between your Ind AS as well as ICDS, there you have to disclose. Yeah, so now I am a chartered accountant. I am doing the practicing chartered accountant. For CAs, cash basis of accounting is allowed. and I have one more business as a proprietary, assuming that there is no violation of code of conduct. And so, assuming that I am doing under mercantile system of accounting. Okay, ultimately I need to consolidate. Now, when I say method of accounting employed, which one I should say? Half is mercantile, half is cash basis. First of all, is it allowed? You are allowed to carry on two different businesses with the two different accounting. Which one? Yeah. Okay, so I want to know. So because I was not there, yeah. Yeah. So now what I should do now? See, I have two businesses. I have two different method of accounting is followed. Ultimately, tax audit report has to be uploaded. One tax audit report. I need to consolidate for sure.
If the same head, then it's not enough.
What head?
Income from business.
It is both are income from business or profession. I am chartered accountant, revenue from chartered accountancy practice, and sell or something else. I do some other consulting or something like that. In my opinion,
Select one option. The other company you have to, other business you have to restate it.
see, in the first place, as a one person, can we have two methods of accounting?
In your books you can have, but in your
No, in the books of accounts is we can have. Whether it is permitted to do under income tax, that is what is my question.
practical thing you're filing, when you say cash basis, whatever you're doing on accrual basis, you have to reconvert it to cash.
Now, whether, see, there are two things. One is adjustment in the statement of total income. One is preparing the balance sheet itself. Okay. So, it is my personal opinion. So, this is applicable for individual. I can have only one kind of accounting. I can't have different kind of accounting for business or profession. See, for business I should have either cash basis or mercantile basis. But for interest income, you can have cash basis. For rent, you can have a cash basis. That is allowed. What is the tax audit what we are doing or preparing the financial statement is for profits or gains or business or profession. So, you can have only one accounting method for this is income from business or profession. For interest, rent or any other income, you can have that kind of flexibility is given. But you have to maintain the same consistently, you have to follow the same thing. Yeah. See, capital asset converted into stock in trade. What will happen? So, my fixed asset, assuming my land, I have converted into stock in trade. It is just a book entry. From fixed asset, it will come and sit in the inventory. So, what it says, that is considered as a transfer for the purpose of income tax under section 45(2). But whether I need to pay the taxes, not required to pay tax at the time of conversion, but when I sell this, then I need to pay the taxes. Okay. At the market value today, whatever the market value is there, and when I am selling, whatever the difference is there, I need to pay under income from business. What to the extent of on the date of conversion, I should pay capital gain. That is very clear. Now I am a developer. I have purchased one 10 years back, thinking that I will keep this land and build on commercial property and keep it with me for rental or capital appreciation. Now I have changed my mind. Let us do residential property. I have converted into stock in trade, no problem. Now, as far as income tax concerned, I need to do percentage of completion method for the purpose of recognizing the revenue. See, I have two costs. One is land cost, one is construction cost. Both put together, I will get in bits and pieces over the period of 3 or 4 years. Okay. So, if that being the case, how do I disclose in the column number 15, class number 15? Because I am converting it. Converting in the current year, next year I am recognizing at 20%, next year I will be recognizing 50%, next year I will be recognizing 100%. So, now I need to split into two parts. Whatever my sale consideration, what I am getting from the customer, how much towards building, how much towards land. Out of land, how much towards on the date of conversion, how much after the conversion. So now even my capital gain also I need to offer in that proportion only, because according to the income tax what it says, percentage of completion means percentage you are selling. So that means for the purpose of 45(2) also I need to consider this portion into consideration and offer capital gain each year. Is it complicated? Yeah. So anyhow, so that is why we are here. Yeah. Okay. Next, class number 16. This is very controversial thing. So many chartered accountants, even myself, I have made a mistakes in this class. Details amount not credited to profit and loss account being item falling within the scope of section 28. Okay. My first question will be, now section 28(4) is expanded and 194(r) is introduced. Any perquisite or benefit is given to any customer in connection with any business connection, then it will be tax will be deducted at section 194(r). Assuming some L&T cement companies, they will take it to all dealers to some Mauritius, they will take it to Singapore. It is considered as a benefit or perquisite under section 28(4). In books, what entry we pass in the books of accounts? No entries is passed in the books of accounts. They have already deducted tax at source. That is already appearing in 26 AS. So now, as a tax auditor, whether I need to disclose this amount under class 16, what it says, details of amount not credited to profit and loss account being item falling within the scope of section 28. This is clearly coming under section 28(4). We need to disclose this? Yeah? But it is chargeable under section 28(4), no?
It's not an income for me.
Yeah, it is in income, so it is amended, section is amended. No, ultimately it is taxable under section 28(4). So then we have to disclose or not? We have to disclose. But see, assuming if you have paid from your pocket and gone to Singapore, what will be the benefit what you would have got it? You have to pay, that 1 lakh rupees or 1.5 lakh rupees ticket charges, hotel charges and roaming around. So there is some expenses you should have incurred, that company has incurred. See what is happening, in the one hand, company is claiming as expenses, correct? But you are not showing as income. Income tax department ke liye, so there is a one under statement of income. So that's why what they did, so okay, if you want to give the benefit, you give, but deduct tax at source under section 194(r). The moment they deduct tax at source, it will come and sit your benefit to the extent of in 26 AS. So now, whether I should disclose under class 16, in my opinion, you have to disclose under class 16. So that amount, it will come and sit in your statement of total income, that will get taxed.
And it will hit the P&L also.
What entry you pass in the P&L?
No, it will not hit the P&L.
Yeah, so that's what I'm, see here what it says, details of amounts not credited to profit and loss account.
Correct, I rectified that.
Okay.
But then, so only here in form 3CD it will come.
Yes.
Whereas in our,
In statement of total income, it should come.
it should come.
Yeah, we have to tax it, no?
Yeah.
Yeah. Okay. In computation, you have to add back this income, so which is not credited to profit and loss account. You have to pay the taxes on that. You can take a credit for TDS, 194(r). Okay. Next. See now, there are, I myself, I have made a mistake. See, I am a proprietor. Okay. I will prepare the profit and loss account, only business profit and loss account. Interest, rent, dividend, everything I have credited to capital account. Okay. So what is the mistake what we do? Amount not credited to profit and loss account being item falling under scope of 28. We will normally ignore last two lines, last part of the line. Amount not credited to profit and loss account. Rent is not credited to profit and loss account. Interest is not credited to profit and loss account. We have disclosed under class 16. What will happen? So anyways, we already shown under income from other sources in the return. But the moment you show here, it will go and hit your statement of total income, and Once again it will be added under section 143(1). This kind of items we should not be disclosing under clause 16. What we have to be careful about, being item falling within the scope of section 28, not rent. Rent anyhow it is not coming under 28, or interest it is not coming under section 28. Only that items which is comes under 28 only we have to give disclosure in clause 16. Next. Where any land or building or both is transferred during the previous year for a consideration is less than the value assessed or assessable by authority or state government. We know very clearly when there is a 50C cases, what we have to do? We have to replace the actual consideration with the fair value of the consideration, market value or fair value, okay, for the purpose of capital gain. Okay. Now, or 43CA. 43CA is applicable for even for inventory. Okay. So, now I am doing percentage of completion method once again. Okay. Now, when I am seeing the fair value, first of all which value I need to see? On the date of agreement, on the date of sale deed, because there is a gap between agreement and sale deed, because builder will give agreement today, but he will do the sale deed after 3 years. In that process, I would have given small amounts every month, 5 lakh, 10 lakhs and other things, and they have recognized the revenue under percentage of completion method. How do we apply this 43CA or 50C? That is what is my question. Date of agreement, provided at least 1 rupee you have to pay in cash or check, not cash, it is in check. Okay. So, that is okay. I will take it date of agreement. In my example, date of agreement, my sale consideration is 1 crore, but fair market value is 3 crore rupees. But I am not recognizing the revenue on that day. Next year, because percentage of completion, there are 3-4 conditions are there, I am not meeting that criteria in that year. Next year, I will recognize only 20% of next year recognize out of 3 crore rupees. You understand? Next year I will do another 50%. Last year I may recognize full amount. Whether 43CA as well as 50C, we require to be taken on proportionately, or we have to do it on one shot. That is what is my question. Yeah. See, if I take it on one shot on the first year itself, I have not even done anything. Okay, I have not even transferred the property. So, it is practical way of dealing is take that 43CA or 50C on proportionately, because you offer it to tax in the same proportion. Class 18. Particulars of depreciation allowable as per Income Tax Act in respect of each asset or block. See, here is the difference between applicability or claimability of depreciation. As per accounting standards, what it says, until asset, if it is ready for use, you can capitalize and claim the depreciation in accounting standard. Here, it is put to use is required for the income tax. Okay, there is a ready for use and put to use. But though we have argued and claimed a generator, it is ready for use. Unless power goes, I can't put to use. Okay. So, we already argued and said that it is ready for use. Even for income tax also it is more than sufficient. Okay. Other than, if I keep that away, now I have a accounting ICDS for fixed assets. Now, is it a difference between my books of accounts and ICDS? ICDS says put to use. I am saying accounting standard books of account it says ready for use. Is it a difference? Yes, it is a difference. Whether we should declare under class 13, because there is a difference, ICDS difference, right? We need to disclose. The moment you disclose here, what will happen in the return? It will go and return hit in the ICDS adjustments. But however, in the income tax return, I have already made the adjustment for depreciation. Scheduled depreciation already filled. Scheduled depreciation, what is debited to profit and loss account, added back. it becomes double. So what we have to do, though there is the ICDS adjustment, what practically what we are giving, so we are showing in the manual form what 3CD, there I am giving, but in utility I am not filling. Because otherwise there is no way I can able to reconcile. So in utility you put 0, but in manual form what you want to do, in that you upload and write a note. Because of this problem I am not able to give, hence I have put 0. However, the difference is already considered in the schedule BP. Okay, next. This section 40A, 1A. So, I need to see as an auditor up to the date of my tax audit report what is paid, what is not paid. But as an assessee, he has an option to make good of that until filing the return of income. Now there is a gap between my tax audit report as well as my return of income. What we have to do? Because ultimately we should, practically we solve this problem. We should solve this problem. What to do?
Not yet paid. But we can't.
No, because I don't know. See, whether he will pay or not, he will take it later after signing my tax audit report. What to do?
Revising option.
Which one? Tax audit report we can revise. So, but I don't know. So, what extent it will impact when I am comparing, when the utility is comparing, whether it will take original or revised, I am not having very clear idea how it will work. See, in my opinion, if that being the case, if it is a small amount, it is better to disallow and in the statement of total income claim in the next year. If it is a bigger amount, try that revising a tax audit report. Third thing what we can do, in the statement of total income, you disallow that amount in the utility and any other deduction is there, no, you claim there. So it will get offset. There is a disallowance and there is a allowance. So that both effect it will become nullified. We can always explain if scrutiny comes, what is this amount means, we can always say, see, this is what is already disallowed, which we already paid, hence we have claimed. We have to give a neutralized effect in the statement of total income so that it will tax audit and your returns will match. At the same time, the effect is neutralized.
They don't understand.
No, but you can understand, no? So ultimately, it will not get adjusted in 143.1, you will not get that intimations. You have achieved your objective, at the same time 143.1 there will be no adjustments. Otherwise, adjustments will come in 143.1 saying that you are supposed to have disallowed so much, but you are not disallowed, hence, so much will be added to your total income. Think about these ways.
Because of this only we got notices, the excluding notices, because of this reason, we are trying to get the reduction.
No, you have to explain. See, I am telling, see, out of this year, I think they have selected some around 80,000 scrutiny notices. So, but this kind of small 10,000, 15,000, 20,000 ke liye, so the kind of, the mess it will create. Big also we can explain. See, why I have claimed other expenses is nothing but 40A 1A disallowance, which I have already paid, here is the challan.
We are increasing our chances to get scrutiny, reduction.
See, otherwise, one tax audit revision we have to do, and hopefully, so they should be considering for the purpose of, matching the return. Assuming if they match with original return, original tax audit report with the income tax return, then once again that adjustments will come.
No, suppose by 30th September the client doesn't deposit the GST. Suppose already the tax. But we know that he has given us assurance that he will deposit. Maybe on 1st October he deposits. So as on date of signing.
I need to disallow. I can't have any option. So once again, whether you can revise the tax audit report. Once again, that is first you file before 30th September and revise the tax audit report saying that these are the things which is not considered earlier, now it has been considered, and so that it return will match. Otherwise, do the neutralize effect in the return of income. Yeah. Class 21H. amount inadmissible in terms of section 14A in respect of expenditure incurred in relation to incomes which does not form part of the total income. Whether disallowance is to be made even if there is no actual expenses incurred in relation to earning exempt income. Earlier we have seen lot of judgments saying that your disallowance under section 14A cannot exceed your actual expenses. Other way also it is there. Disallowance under section 14A, it should not exceed exempt income itself. Okay, now in 2022 they brought in an amendment to section 14A. They told that this is what the law even before, but anyhow it is a prospective amendment. So they are telling even though there is no income, you have to disallow, we need to disclose that amount in the income tax audit report. Next, company is invested in partnership firm. Normally we know we have two columns, one is fixed capital account, one is current capital account. For the purpose of 14A, whether we have to take fixed capital and current capital together or only fixed capital. 14A because share of profit from the partnership is exempted. If somebody can ask, okay, I will get interest on capital, that is taxable, why 14A is required to be done? So that is different issue. So what I am trying to say, whether I need to consider for the purpose of calculating 14A, whether I need to take fixed capital or current capital also. So it is once again company how they have disclosed in the books of accounts. In real estate company, fixed capital they will show it as an investment, current capital account they will show it as a loans and advances. Okay. If it is a loans and advances, one view is you need not apply 14A. If it is an investment, then only you have to apply for 14A. Because 14A is applicable for your investments, not on loans and advances. So consider these things. If it is a big amount, so whether we have to show it as an investment or loans and advances is something which we can look at it. Next.
14A will also be applicable for rubber estate?
Yeah, 14A, as long as your expenses, income is already bifurcated, no sir. So that is what that Rajendra Prasad Modi case where it came. So that is where they invented 14A to supersede that Supreme Court case law. I have not applied my mind with respect to rubber industry. So I really, so because what kind of expenses it will go, that is something which we have to look at it. Particulars of payments made to a person specified under section 48(2)(b). This we are clear. So 48(2)(b). For companies, we could able to go through related party transaction and capture this amounts, no problem. If it is a partnership firm, how do we identify who are all my relative or the proprietor's relative or persons who are covered under 48(2)(b). There is a one circular in 13(3) in which is given in specified person under trust. What they are telling, take a declaration from them. It is 1974 circular. As on today, it is alive. So the same kind of disclosure you can take it from the partnership firms and partners, and based on that you can give this disclosure. See, 48(2)(b) disclosure is required to assess whether you have paid more or less to the persons who are involved in the business. Assuming I have purchased one immovable property, like it is a capital payment, whether it will covered under 48(2)(b).
Capital payments?
Yeah.
No.
Why? It is only expenses. See, if it is a capital payment, we already have a 56(2)(10), 50C, 50B, all these things are there. So capital payments are not required to be disclosed under this column. However, we say give a note saying that capital payment relating to this we have not disclosed here. Because there will be some transactions. Somebody can ask why you are not disclosed. Say that I have not disclosed capital payment or some reimbursement of some expenses. Better to give note reimbursement of expenses is not form part of this 48(2)(b) disclosure. Other issues. How can a tax auditor ascertain regarding person covered under anyhow it is already cleared? Okay, this is anyhow it is already clear. Okay. As we know, 43B payments which paid, not paid, we have to disclose. Afterwards, they will file the income tax return. So, we already discussed, if they pay any tax payment on or before the filing of return, once again we have to revise the return or stick to whatever it is there in the tax audit report, so that it will not make any adjustment in the return of income. Here is the case, an interest payable to bank, it will come under 43B for sure. Okay. So, now I have not paid the interest for last 2 years. Okay. So, now banks have come, okay, we will do restructuring of your account, all interest payable I will add it to principal. Okay. So, now you have to give me interest on the revised principal amount. Okay. Now, how do we claim this 43B, which is already last 2 years I have disallowed now. Okay. So, now how do I claim in the return of income as well as disclosure in the tax audit report? Whether first of all, just because interest is capitalized, that means it is considered as a paid and accordingly I should claim in the same year. Because it is capitalized, it becomes a loan now, it is not an interest anymore, it is not an interest. What do we do? In this kind of scenario, so there is a one circular, what it says, when you interest is capitalized and restructured, then any rupee you pay towards principal, you need to bifurcate into two parts. One is interest portion, how much you have paid, how much principal portion you have paid. Interest portion of repayment of principal, you should be considered as repayment of interest. Accordingly, you need to disclose in the 43B. Auditor. See, I will tell you practically in COVID period, almost all accounts are restated. 6 months interest, they have capitalized. 6 months over not paid, so all the interest has been capitalized and the EMI has been reset. Okay. In this case, we can't say that they have paid the interest, they have not paid the interest. It has to be disallowed under 43B and it has to be, split into two portions. Assuming I will give an example, 1 lakh rupees is my principal, 20,000 rupees, my interest, clubbed together, it becomes 1,20,000 rupees. Now, what is the ratio? 1:5. 5 is principal, 1 is interest. Now, assuming I have paid 60,000 rupees repayment, in that ratio, I need to show interest as 10,000 rupees, 50,000 rupees for principal. To the extent of 10,000 rupees, I should allow in the statement of total income and also disclose in my tax audit report. Okay. See.
Suppose previous year, 22-23, we disallowed something.
Yes. 20,000 rupees I disallowed. Yes. That is the total amount is how much? 1 lakh plus 20,000, 1,20,000. Interest I have disallowed 20,000. Principal I need not disallow.
Yes. In my balance sheet, 1,20,000.
It's showing. This year I have paid 60,000.
And I debited 20,000 in my P&L, that is why I disallowed in 43.
Yes.
Now next year, 23-24.
I have repaid 60,000 rupees out of 1,20,000 rupees, 60,000 rupees I disallowed. How much interest I should allow under section 43B? Because last year I had already disallowed 20,000, no? So this year, how much I should do? This year it is not hitting, because I already disallowed in the last year. 43B is what? On the payment basis you will get allowance. So this year I have made the payment. How much I paid? 60,000 rupees. So 60,000 may 50,000 towards principal, 10,000 towards interest. So I need to split that. I need to, yes, I need to keep that ratio intact. So that ratio you have to keep it. Whatever the principal amount every year I pay, so that I need to split into two parts. I need to allocate and claim under section 43B.
Normally the bank will give the interest certificate, right? When they split the EMI.
See, there are two things. Some banks, they have created for interest ke liye new separate account. In COVID period, whatever interest is not paid, so they created one more loan account. Some back they have continued the same thing, saying that this is what is your revised principal. When we have two different accounts, then I have no issue. When I have account with one account, then there is a issue.
Current year's interest would have also accrued, no?
No, that is anyways you will get allowed, or 43B anyway you will apply, right? So that you will apply. So I am not the current year issue, I am in previous year issue. Okay. So this is, I think in COVID period, most of the cases this has happened. So we might have to see 43B whether we have allocated as per this circular. Because if I am allowed to interpret, I will say that I have paid 60,000 rupees. That means first 20,000 rupees I allocate to interest, another 40,000 rupees I allocate to principal. So that all 20,000 rupees has to be allowed in the current year. To avoid this kind of scenario where you can't able to split properly, then you have to go with this circular, and it says you have to take proportions.
I think RBI guideline is also there. You're paying a lump sum amount to the bank. They can adjust.
That is the Clayton rule.
First was interest and balance to the first principal.
No, see, in restructuring, so that there is no principal and interest, everything becomes principal. That is where the problem is. Next, whether taxes.
Sir, suppose he pays 80,000 out of that 120 which was appearing in the balance sheet last year, 22. This year, more accrued interest is suppose 40,000 and they paid 80,000. So, out of that 80,000,
Now, how much is the closing balance of loan?
yeah,
How much is your closing balance of loan?
I don't know.
Okay, so that's what I'm saying. See, 80,000 rupees you have paid, that means 40,000 rupees principal outstanding. That 80,000 rupees has to split into two parts. One is 5:1. Okay, that much you have to claim under interest.
No, 80,000 will have current year's interest as well, no?
No, what I am talking about only in principal payment, repayment. Okay, interest anyway you claim it, right? So what is the principal repayment made towards your 1,20,000 rupees? That principal repayment we have to split into two payments. Okay, whether assessee is required to deduct tax or collect tax as per chapter 17B. We know that this is the table we have to disclose. The issue is the assessee gets the lower deduction certificate. If the assessees get the lower deduction certificate, I come to the column number 6 and 7 where the amount of tax deducted out of column number 6, amount on which tax is collected at the less than the specified rates. What is specified rates? According to me, under section 194I, I need to deduct at the rate of 10%. Okay, I got the lower deduction for 1%. Whether that is considered as getting lower deduction certificate is considered as less than the specified rate, I need to disclose that there is a short deduction.
No, there is no short deduction.
So in that case, when I get a lower deduction certificate, how do I disclose here? Huh? Place is there. Anyhow, so what is specified rate means what is the rate given under respective section or any other lower rate issued by the assessing officer under section 197. If the TDS has been deducted as per 197, then I need not disclose under column number 8. It is not less than the specified rate, it is specified rate only. Okay, I need to see what is the rate at which supposed to have deducted or what is the rate given by the assessing officer under section 197(1). At the same time, I need not disclose hard short deduction or short remittance. I need not disclose under section 20, class number 21B or class number B1, B2.
So what is the answer for the first question? How to verify the TDS data in case the assessee has almost done?
You tell me now. Okay, see, first of all, we need to give one disclaimer saying that I am doing this class on test check basis. Okay, I relied on the data produced by us. So based on our test check basis, I didn't get any variations which which will make me to go into deep. Okay, that is number one. Anyhow, that disclaimer you have to give. So whether we like it or not, we have to give. Number two, what I will do, I will take the what is uploaded returns, download it and take the MIS report from that. We can do it. Number two. Number three, what are the challenge we have made, whether subsequently attached. That is number three. Number four is reliance on the system. There are some softwares at the time of issuing the purchase order itself, it captures under what rate we have to deduct. Whether that kind of system is existing in the client. So because there is no manual intervention is required. Okay, so we might have to place some reliance on the system. At the same time, checks and balances, like it might be difficult to check TDS deducted on contractor, but TDS deducted on professional charges we can reconcile, easily reconcilable, and rent paid, that we can also reconcilable. Interest on TDS, whether it is reconcilable, yes, it is reconcilable. So if you see out of 4, if you can able to reconcile, and whatever the amount what you deducted on 194C, where all the challans are consumed, at the same time they have system in place, then you mention that fact and leave it at that.
But it has to be reconciled to the P&L account, no?
No, see, that is as per tax audit report is required, not required to be done. So, but as a auditor, to get our own comfort, see, we have a lot of difficulties in reconciling with profit and loss account. Assuming I am constructing one building, which ultimately it will get capitalized. Okay, and there are some builders, they do percentage of completion method. Okay, there is no way we can able to reconcile with anything, because portion is already reconciled, taken to profit and loss account. Some we have made a provision, some we have already taken before even work is completed.
And balance goes to work in progress.
Yes. So it is very difficult to do it. To the extent possible, you can do and mention what you have done with respect to what is the audit functions, what you have done. So it is better to disclose in the manual report. Next, class number 40, when you are giving these ratios, GP ratio, NP ratios, if you see, there are some ICDS adjustments are there. Whether I need to go by financial statement ratios or I need to give the ratios, adjusted ratios, after considering all ICDS adjustments. Financial statements, I think more or less I am also okay, but the problem is, once again, I have a problem with real estate people, where my turnover is on percentage of completion. In books, completed contract, my books it says 0 turnover. What is my ratio? 0. But I am disclosing so much of profit under income from business, under percentage of completion in statement of total income. So virtually the percentage what we are showing there versus what you are disclosing in the statement of total income, virtually it is not matching. So that is the fate.
So for multiple businesses, like two verticals, can we show the primary vertical which is?
See, once again, what we are talking about turnover means turnover what we have discussed. So that same turnover. Assuming I have a sale of fixed asset, I can't take it under GP, but NP you can take it because it is credited to profit and loss account. Okay.
But for profession and all, there is no gross profit.
Yes. So it is guidance note on tax audit very clearly says you need not give gross profit where there is a profession is involved.
No, I didn't understand what we have to do.
You need not give anything, 0. So you need not disclose under gross profit, you need not disclose for a profession.
Two verticals. Suppose I have
Business as well as profession.
no, not business. Both business, but two verticals of business.
It's okay, you combine together you give. That's what I am saying. This ratios has no meaning, because what I am disclosing in the statement of total income, which is much more than that or much less than this, but what I am disclosing as per the profit and loss account.
But if I had been giving the primary, then what should I follow?
See, ultimately you have to go by your profit and loss account. Okay. If profit and loss account contains 2-3 businesses, you have to give as per the profit and loss account. You should not make any adjustments, ICDS or otherwise adjustment, while I am giving this gross profit or net profit. However,
Suppose for trading income,
hmm,
and supervision charges,
okay.
then should we club and give the ratio, or
For the purpose of turnover of ascertaining the tax audit, are you clubbing?
suppose I am doing tax audit, it is already crossed 2 crores.
Okay.
Trading only, suppose.
Whether it is a income from business or professions falling under section 28 to 44,
Oh, yeah,
then you have to club it. Then you have to club it.
then the ratio will be very different.
That's what I am saying. Ratio has no meaning. So that's what I am saying.
Because I have not given like that, I have only given trading.
See, once again, it is all debatable points. Okay, it goes by each client to client and based on the data available. So ratio has no meaning in many cases because there is a statement of total income. There are a lot of adjustments. I say here 1% profit, but ultimately I have declared 25% profit in the statement of total income. Okay. So now breakup of total expenditure of the entity under registered and unregistered. This is very interesting.
Can we give a disclaimer?
You have to give. So then what else?
Not put figures.
So that is seems to be very not so good. I feel so we have to make some honest effort to give that. See, giving the disclaimer is very easy. Okay, but we have to make some, because the government is asking some details, means it becomes our duty to make that effort and give to the extent possible. Okay, if everybody start giving that disclaimer, so then what is the use of this clause 44? See, here is the some interesting issues. Bank charges, under which column I should show? Relating to goods or services exempt from GST, relating to entities falling under composition scheme, relating to other registered entities, total payment to registered entities, expenditure relating to entities not registered under GST.
Column 5 registered.
Huh? Bank charges. How do you know that bank is registered? Okay. Interest,
Interest will fall under not.
which one?
Oh, which interest, sir? Which bank interest?
Bank interest.
Bank interest will come under exempt for third column.
Related to entities falling under composition scheme.
Before that,
Goods exempt from GST. So we have to municipal tax. What you pay?
so it will come under your 7, last column.
So it is exempt or not registered. There are two things are there. So according to me, tax on tax is not there. So first of all, it is not exempt. So first of all, I don't know whether they are registered or not. So you have to see which one is appropriate and accordingly you have to put. So these are the things which is very critical. Otherwise, electricity charges.
Exempt.
Huh? First of all, whether it is a taxable. So it is, what is exempt is first it should be taxable, then it is exempt, not exempt. Right? So that is how the exemption will work.
Where it should go, sir? Last column, electricity.
No, expenditure relating to entities not registered under GST. I don't know electricity Bescom is registered under GST or not.
So how do we save ourselves?
So payment to registered entities relating to other registered entities, according to me it has to come column number relating to goods or services exempt from GST or last column. According to me it should ideally come at last column, but because there is no way they have mentioned what is their GST number in electricity bill or something like that. That is expenditure relating to entities not registered under GST.
So even salaries to partners and interest will come in the last column.
Yeah, so assuming I am having a rental income, I have a GST number, but I am not charging interest and remuneration ke liye GST I am not charging, no. Okay, these are the practical challenges are there. So we need to appropriately disclose. Not only this, ultimately what tax audit guidance note they say that your profit and loss account and what you have disclosed give one reconciliation. Reconciliation of total expenses what you have shown here and what is there in profit and loss account in your workings, given reconciliation. Now I have follow up questions like interest, borrowing cost which I have capitalized in the books of accounts. Whether first of all I should show here because it is not debited to profit and loss account. And all the administrative expenses until the asset is put to use I have capitalized including salary, everything I have capitalized, nothing there in P&L.
But it says no capital expenditure also you have to include here
Where?
in this 44.
It says breakup of total expenditure of the entities registered or not registered. What is expenditure?
Revenue plus capital.
Capital expenditure.
Yes.
You know, so it is a good definition, but you know, so the otherwise how do you reconcile in the first place?
Entire profit and loss has to come.
No, so it is once again there is a two views possible. So whichever view you are taking, you say I am taking only revenue expenditure or I am taking only revenue as well as capital expenditure, I am reconciling with this. Whatever your position, you make it clear in your notes. You take whichever the position, better to give a note. I have taken only revenue expenditure, I have taken only capital expenditure or I have taken both. Give a note. Bank charges municipal. Other issue. In my opinion, and we are following from last 4-5 years, along with balance sheet and profit and loss account, we are uploading the manual tax audit report which is signed by the client. Because they should not say that tomorrow I didn't discuss with you or anything. So take the manual signature from the client, put the seal everywhere and upload it, that will be better. Revised tax audit report we already discussed. Is the tax audit applicable for charitable trust claiming under 1112? We have already discussed. So if they are doing any kind of business or a business which is incidental to the objects, and if it is whatever the amount is more than whatever the threshold amount, do the tax audit with the note saying that tax audit is done on abundant caution, just to escape penalty. So otherwise it should not be an issue. Interplay between 3CD and ITR. See, this is very important. What you are disclosing in 3CD.
Upload tax audit report as an auditor, then the client also has to accept it, no?
Yeah, he has to accept it. No, that electronically there, but there are so many notes you give, these reconciliations you give, so that and all I can't upload in the utility. There is no way I can upload in the utility. The only way I can upload is take a manual, everything you do it and get the signature, scan it, and along with the balance sheet, profit and loss account, there is one more attachment it will ask, any other attachment, there you upload it.
So can we digitally sign it?
Yes, no problem.
Both.
Yes, you have digital signature of both. In here, okay. So interplay between 3CD and ITR, it is very important to know if you disclose something in 3CD, where it will go and hit in ITR. See, this is the class. If you disclose in 13E, so it will go and hit in 3A. So this kind of adjustment you should see before uploading income tax return. So if something, if you are disclosed in these columns, you have to see in schedule OI, and accordingly it should match. If it is not matching, then 143(1) intimations will come with the additions. So there is a one list which is validation rules, which is released by income tax department itself. So it is better to know this validation rules before uploading and accordingly fill the ITR. If you are using any one software for both, like Winman software for uploading tax audit as well as filing the return of income, normally it will take care. If you are using the income tax utility for filling tax audit as well as one income tax return, then there will be chances of mismatch. It is better to cross check and then upload it. Any other questions which according to you require to be practically answerable? I hope
Your phone number,
Okay, we can give you. Okay.
Whether we have to declare even like banking transaction also.
See, see, this is the major problem with real estate companies where if you are selling any mall property in a cash or other cash, so there it says it requires even that also required to be disclosed. Even non-cash also we are required to be disclosed. We are giving one disclaimer saying that it is company's policy is to trade or disclose in the books of accounts only cash check entries or banking entries, and they have no policy to take a cash for purchase or sale of properties or whatever. Accordingly, so we have and volume transactions are too voluminous, we are not giving here. If the same is required, that will be produced at the time of assessment. If it is required, we can produce during the course of assessment. Otherwise, assuming 2000 apartment, 3000 apartment, every month people will pay for installment. More than 20,000 entries, 30,000 entries we have to give. So that kind of, no, even giving the data also is not an issue. Whether your utility will take that kind of data, that is major issue. So, any other questions? Huh? Yeah. No, you have to show only net profit or loss. You need not declare under sales column, you have to show as other income or other expenses. Yeah. Because the moment you show under sales column, GST people will come. Where is the GST registration for this kind of sales? Okay. So they are matching your business income with GST. So if you are registered, no problem. If you are non-registered, once again there is no issue. Net amount you have to disclose in the income tax return, because there is no way I can show positive or negative, because it is not as expenditure to earn that selling. Okay, so it is not I have purchased something and I have sold something. Okay, this loss is something different and this income is something different. Okay, so we have to show net amount only for the purpose of determining whether tax audit is required or not. Only for that purpose I need to do this exercise.
Sir, many SSCs, they have cash dealings, income as well as expenses, which they don't want to disclose for two auditors.
No, whether they have disclosed to you,
No.
then why you are worried? so there is no way I can able to come to know, right?
Directly I know, I know it does the officers are.
Then whether we have to consider to continue as an auditor or not is something which you have to, it is a matter of professional judgment. Okay. No, speculative losses के लिए you will carry forward. So, see, future and option is not a speculative. Okay, so still you can carry forward. You can only put other expenses, that loss will come, so that loss will get carry forwarded. No problem. See, once again, take a practical call on an individual basis. So, which one is better? If I show 10 crore rupees turnover at the same time 10 crore rupees expenses, so then they will ask what is this 10 crore rupees turnover? Ultimately, it is 1 lakh rupees or 2 lakh rupees is the net profit. Okay. Yeah, so it might be loss also. Many times it is loss only. It is not only profit. So keeping in mind, so practicality and assuming if I disclose what will happen, so all these things. No, what is the use? See, ultimately it will take negative figure also, right? If I show it as other expenses, it will consider. That loss will flow into your schedule CFL. No problem on that. No, if I am having any advantage, then I will look at it, because return will get processed, no problem on that. Any other questions, sir? Yes. Tax audit we have to give 3CB. Yeah, if the company is already, because we already given 1 year balance sheet. Current year what happened? Huh? Okay. got merged with other company, then we have to give 3CB, because there is no Companies Act balance sheet will prepare. Once the companies get amalgamated to some other company, there is no way we can able to do it. You have to give 3CB only. I have one major problem, because company, once it is get amalgamated, that company is itself, it is not existing. So filing the return for non-existing company itself, it is an issue. Okay. Yeah. Okay. So any other questions, sir? So thank you very much for patient listening. I thank Bangalore branch of Institute of Chartered Accountants of India to organize this seminar and calling me for produce my views. Also thank my partners and my colleague and my senior partner Dr. Venkatesh. So without his so involvement in my whole career, I wouldn't have been there here. It is always nice feeling to come to Bangalore branch and see the benches where we are sitting and read our CA courses. So once again, thank you very much for everybody. Thank you. I will.
Practical aspects of Form 3CD, nitty-gritties of each clause was very well dwelled upon by CA T R Shivshankar sir. A round of applause for his time and efforts. On behalf of members present here and all the managing committee members of Bangalore branch of SIRCF ICI, I would like to thanks Speaker CA Shivshankar sir. As a token of gratitude and respect, we would like to give a memento to Speaker. To do that, can I request CA Rejo sir, our managing committee member, come out to dais and then do the honors. Thank you, Rejo. Thank you, sir. With that, we come to end of one-day seminar on tax audit. Request all of you to register for 55th SIRC conference on or before 5th September 2023 to get early bird offer. Keep supporting Bangalore branch programs. Thank you one and all. Good night.